Hey guys, everyone, welcome to Binomo Live on a new Thursday. Today's topic, we're going to talk about staying cool in volatile markets. I hope you guys can hear me. If not, let me know in the chat, let me know in the comments section. For those of you guys who have been joining us, thank you. Appreciate seeing you again. Yeah, so we're going to be talking about volatility. Ahmed, yeah, why not? Okay, trading real account. So I get this question almost every live stream. This particular live stream that we're doing, I'm going to answer that question first. Why I'm not doing live trading, I'm doing demo trading in this live stream, is because we're covering a very short topic. The live stream is about half an hour. So in talking about short topics, you are also putting it together with a short time period for trading, and that's not realistic. In real trading, if I trade my real account, I will be looking at the markets many times in a day. So I will be focusing on the Asian session, looking at what's happening. I'll be looking at what happened yesterday. I'll be looking at the London session, and I'll be following all these assets as well as trading opportunities through to through the New York session, and then I will probably trade late London session or in the New York session itself. So if I'm doing live trading, if I'm trading real money, you will miss all of that if I'm just showing you the last half an hour, which is right now. Okay, so you don't know what the context is. So that's the reason why I don't do live trading on these live streams. Maybe we'll do it in the future. That'll be a suggestion that we'll consider. So coming back to volatility, the thing about markets is it can be a roller coaster, but you've got nothing to worry about because we've got you covered. You have to understand that volatility is something that everybody knows. You know, if you don't understand market volatility, I'm going to tell you it's actually market mood swings. And if you really don't know what that's going to look like, it's like your ex. You know, they are unpredictable. Okay, so but it's not all bad news, because volatility is how you make profits and you find opportunities to make profits as traders. Okay, so that's the whole thing about volatility. People who are not used to the market, people who've never put money in financial markets, when they hear the word volatility, immediately they start to run away. Immediately they think, this is too much risk, I'm not going to put my money in danger. So they think danger when they see volatility. But actually, when you understand volatility, it's actually mood swing that if you analyze, you can actually capture the patterns, you can capture the timing. And that is actually going to give you, as traders in the markets, people who risk capital in the market, opportunities to make profits. Okay, so it's not all losses. It's all losses if you don't understand what's going on. It's all losses if you have the wrong mindset looking at volatility. Look, if you have been in the market for 1, 2, or 3 years, definitely you will have a different view of volatility, because new traders will look at volatility and immediately think of danger, whereas people who have been in the markets, who have seen how it's possible to make profits, how it's possible to avoid losses, and how it's possible to fix mistakes, they see volatility differently. It's not all danger, it's actually cycles of bearishness or pessimism, or it's a cycle of bullishness, which is optimism. So you can find yourself in between these cycles and make money from those movements by participating. Okay, but if you don't participate, there's no way for you to make money. If you don't participate, there's no way for those opportunities to give you any kind of reward. So it's important to look at volatility in a different way. And when I say in a different way, not jumping in, but through understanding. Now, how do you deal with volatility? So the way to deal with volatility is you stay calm and continue to trade. Okay, panic is the worst enemy. Okay, when it comes to volatility, panic is the worst enemy. If you panic, stay away from the market. Do not open your trading account. You will lose money. So don't do that. Okay, people think that traders in the market are all crazy people who's going there gambling and putting all their money so that they can lose it. Actually, no. Skilled traders, experienced traders know that when you can't explain what's going on, you don't do any trades. You analyze and understand. The way to make money is to understand the patterns and cycles, and through understanding, you will be able to find yourself profitable opportunities. So panic is your worst enemy, and then you need to stay cool and collected. You need to understand what you know, understand what's going on, and then go in by taking certain risks. Okay, so of course you breathe in and breathe out. That's how you stay cool. And whenever you get emotional, and of course you will get emotional whenever you lose money or you make trades that don't give you profits. You get emotional, you become fearful, you become revengeful, you want to make back all those losses in an instant. So that's when emotion will go to your head, and you need to stay away from the market and look at your trading strategy. People overcome their emotions by following their trading plan and trading strategy. That's the whole purpose of having a strategy. Okay, now if you don't have a strategy, then immediately stop trading in the market. Okay, so but emotion is not only when you lose money. When you make money and you are profitable in the market, you also get this emotion going on in your head, that the kind of emotion that makes you feel like you are the best. You cannot make any mistakes. Everybody is wrong, and you are the only one who's right. That is also dangerous. A lot of traders who've been in the markets will also tell you that the biggest mistakes happen when you make the biggest wins. Okay, so once you start trading in the market for the day, a couple of winning trades will give you this overconfidence. My God, by the end of the day, some of these traders lose everything, all the profits they made earlier in the day. So that is when emotional coming from winning trades, emotional driven decisions coming from winning trades will not help you. Okay, so like I said, when it comes to volatility, you've got to stay calm and continue to trade. Understand that panic is not good. Stay cool and be aware of your emotion. If you think you're getting emotional, step back and just watch, but don't trade. Okay, that's how you stay focused in the game and make profits time and time again, by being aware of these things that's gonna hurt your trading. The next thing with volatility and how to win in a volatile market is knowledge is power. You've got to understand your assets. Whatever you're trading, whether you're trading Forex, whether they are major currencies, whether they are minor currencies, exotic currencies, whether they are stocks, whether they are indices, whether they are commodities, whatever, you've got to know your assets. Okay, how do you know your assets? Do some fundamental research. Go and look at economic data, news events, geopolitical situations, read about politics even, and understand what's happening. We see all this data being reported every day in the news. It is building a picture. You know, when you see rain happening every day, you sort of have that idea that at some point we're going to get some big flood happening. The same way as you reading the market. If you're seeing good data coming from Australia, you know, last week full of good data, this week full of good data, so you can expect inflation to go up in Australia. You can expect interest rates will also follow that trend by going up, because central banks want to control inflation by raising interest rates. And when things are not so good, then you can expect for inflation to come down, unemployment to go up, and central banks will have to make the decision to start cutting rates at some point. So know your pairs, know your assets by doing some fundamental research. Okay, so knowledge is power. When the more knowledge you have, the less panic you will be, the less emotional you will be. So to address volatility, make sure you arm yourself with knowledge. Okay, read, watch, listen, observe. Next, you got to have a game plan. Okay, I mentioned that you need to have a trading strategy. I mentioned you need to have a trading plan. This is something that will guide you every day, every week, every month. Okay, that's where you're going to set your goals at the beginning of the month. This is the month of May. So at the beginning of the month, you should put in your trading plan your account balance, and your goal for this month is, let's say your account balance is $50 or $100. So you should try to grow that by, you know, if it's $100, you want the end of the month, you want to see 110 or 120. That's really good. 10 to 20% return is really good. And it's actually possible. More possible than you think if you haven't tried it before. So, and then you got to analyze which assets you're going to trade, put it down in your trading plan. What strategies you're going to use, what indicators you're going to use, what patterns you're going to wait and trade. You're going to wait for those patterns, and once you see it, you're going to trade those patterns. What are those patterns? Put it down, put those things down in your trading plan, and then wait. Like anything in life, you want something good. It's not going to come to you. You got to go and find it, and you got to wait for it to show up, and then you got to pounce and grab it. Okay, so opportunities are going to be around you, but it's not going to be every second. So if you think you need to trade every minute of the day, you're wrong. Good setups happen a couple of times in a day. Sometimes no setups happen in a day. That's fine. Be patient. Come back the next day. So have a game plan, and then wait for the right setups to appear, and then you trade your plan, trade your trading strategy. And next thing, to win, when you're trading in a volatile market, you gotta have patience. And patience is something that it's not just a word. You gotta practice it. Okay, you gotta practice it. So how do you practice patience? You practice it by trading in the demo account. Okay, what if I told you you cannot touch your trading account, your live trading account, unless you make 3 or 5 back-to-back winning trades in a day? So every day you go into the market and you want to start trading, you want to get rich, you want to grow your account, you want to start to make real trades with live money. You've saved all this money, you've put it in the trading account, some of it, not all, and then you want to trade, you want to grow that balance. You got your trading plan at the beginning of the month, so that balance needs to grow by the end of the month. But what if I told you you have to produce 3 winning trades back to back in your demo account before you can open your live account? Then you'll look at patience differently. It's not easy. Even if you gamble, you're not going to get 3 straight wins every time. Maybe you get it once or twice in a week, but the remaining 2 or 3 days you can't trade your live account. Why? Because it's not easy to get 3 back-to-back wins in your demo account. So patience is something that you can practice. Practice it in your demo account, and then bring that discipline, bring that that part of you that has applied patience in the demo account to get wins, to get good trades. Bring that to your live account, and then once in your live account, you'll see that you won't be jumping on everything. Okay, you'll be waiting for that perfect shot, and you will apply that sensibly in order to make good profits. Okay, and that good profits doesn't have to be big profits. There's no point in making big profits, but you make it once or twice a month. Small profits 3 times a week is better than 2 big profits in a month. Because you know what's going to happen, right? You make 2 big profits in a month, and all the other days in that month are big losses. So you don't want that. So being patient means after you make profits, it doesn't mean that you're going to be right all the time, and it may also mean that you have to stop trading for the day, because you want to protect those gains and come back to the market tomorrow with confidence. Okay. Hi, Loose Gamer 360. Happy to see you again. And earlier I said you got to know your assets. You also got to know your tools. Okay, you got to know your tools. You got to know what tools you're going to use to evaluate whether the market is bullish or bearish. There are certain tools you can use. One of it is relative strength, RSI, and there are other indicators as well. You can also look at, you also got to know how to determine liquidity levels and demand zones and supply zones. So you got to know which tool you're going to use. Some people are using Fibonacci, some people are using support and resistance lines, some people are using something else. So some people are using moving average, some people just use 2, some people use 3 or 4 or 5 moving average lines. So that depends on what is exciting for you. You don't want to use boring tools that you don't understand. You got to understand those tools, and you got to enjoy using them and make sense of it. That's how you're gonna be able to be effective as a trader with all these tools. So remember, the tools, however, do not trade for you. They do not guarantee returns, At the end of the day, tools are just there to show things to you on a chart. You are the one who have to decide when you're going to go in, at what level, in what direction. So all the other things apply. You got to know your assets, you got to do some fundamental research, and you got to control your panic, emotion, and have a trading strategy. Okay, so yeah, so that's about it. In terms of volatility, we sort of rushed through it, all the tips in 10, 15 minutes, because I do want to move on to live markets and look at what opportunities we have today. So earlier today, I'm currently looking at AUD USD. As you know by now, AUD USD is probably my favorite asset because it's easy to read, and when it moves, it makes bigger moves than GBP USD and Euro USD. Okay, so far in the last couple of weeks. So that's why I like analyzing this asset and show this to you guys. But I don't lose sight of Euro USD as well. Euro USD is a major asset that will also have influence on the sentiment that we are observing. So if you're seeing bullishness on Euro USD, you got to be prepared to see the same bullishness on AUD USD because of how major the asset is. But also know that there are differences. Okay, Euro USD is being affected by news coming from the economies in Europe as well as the US economy, whereas AUD USD is being affected by China, because China is a big trading partner to Australia, huge trading partner to Australia. So if China economy goes down, you can immediately see weakness in Australian dollar. So you got to understand that there are differences. Okay, so let's look at AUD USD. I do want to point out the movements that we are seeing today. Look at that line right there. See this green line spiking up. So that's when the news came out, and that news is actually I think it was unemployment coming from the US. Earlier, I think, was it yesterday, we got yesterday we got CPI coming from the US. It was it met expectations, and there were some numbers that were suggesting weakness. Price pressures are starting to come down, which means that inflation are probably not increasing as aggressively as before, and maybe even start to go down in the coming months. So yesterday we saw some of that in the CPI numbers coming from the US, and today we also have the unemployment numbers, initial unemployment numbers from the US, and it was worse than expected. So they were expecting something like 220 or something, and the numbers were higher than that. So when unemployment numbers are worse than expected, which means that more people applied for unemployment benefits. Basically, more people were jobless. That's what it means. So when unemployment goes up, now that means that the economy is slowing down and probably not expanding. Now that's going to support the sentiment of weakening US dollar. Okay, so if unemployment numbers are bad, weakening US dollar will mean that Euro USD will go up because Euro becomes stronger than the dollar relatively, and then AUD USD would also go up relatively because people are seeing weakness in the US dollar. So when that happens, when that news came out, there was a spike up, which is expected, but then the asset pushed all the way down. So really, you can't, there's no guarantee in the market that if this news is positive, the market is going to react this way. There's no guarantee that if you see good news and then the market is going to react in a certain way. So you don't trade based on news. You trade based on what you see. So if you're seeing the weather report saying that it's going to rain, don't trade by buying umbrella because the report says that. How do you trade? Go outside, open the window or walk outside and see whether it's raining or not. That's how you trade it. So in the market, we can read economic reports, we can read about economic data, but you don't trade based on that. you look at what happens in the market. Where do we get that information? Price chart, the one you're seeing on the screen right now. You trade based on the price chart. What's the movements that's happening? So after that news, you give it 2 or 3 candles, you're going to see the real movement that's going to unfold. And it started to push down. And there was consolidation here. See, there was a support here at 0.66657, something like that. And that support stayed for a while, held price for a while, and then broke down again. And you got 2 candles. You got one confirmation candle here, and then second green candle that kept the price below the support level that was broken. So that's confirmation. First, the consolidation area was broken, and then you got a second candle that pushed prices even lower. You can trade that. You can trade that and make some profits here because this is a 5-minute time frame. So if you open trade with 3 or 4 candles, you'll probably make money. Even if you open your trade here and your 4th candle is probably here, this green candle here, it'll close lower than your opening price and you're going to make money from it as well. Okay, so 3 or 4 candles on the 5 minutes is pretty good, but that depends on your strategy. For me, it seems to work. It may be different for you. Look at what works for you and then use that consistently to make profits in the market. Now, after that, the asset found support at 0.66546. There is support, no doubt about it. Why do I say that? Because you got green candles all the way up, and then there was the last high was here, 66664, something like that. So all these green candles push it up past the resistance. So trend change. And now the asset is moving in the direction of the economic news, which is dollar weakness. Okay. Now, at the moment, it seems like there's some consolidation here. Okay. Now that's interesting because every time there's consolidation, what happens after consolidation will be price movement in a specific trend. It will either go up or it will either go down. Some people call it breakout, or you can call it, you can see that the asset will start to trend, but it will have to resolve this consolidation first. There is this zone of buyers and sellers not really sure what's going to happen, whether things are going to go up, whether things are going to go down. Nobody is sure. And I say that because the fact is nobody is sure. Because if everybody agreed that things are going to go down, the candles are going to go down. The candles are not going down. So there's 50% people saying that it's going to go up, and the other 50% in the market are saying things are going to go down. So what do you do as a trader? Things look volatile, yeah. So what do? You wait and see. So we know that the economic data direction is dollar weakness. It didn't happen at the beginning. It went down. So this could be some big banks trying to manipulate and force the sell. So they're gonna sell boatloads of AUD USD. They do a lot of selling, and then everybody follows them. Big banks, big money, big traders, they trade huge volumes and they move prices because of their huge volumes. Now, normal traders like us, when we see this, we follow them, because why fight the trend? If you fight the trend, you're not going to make money. If the price is going down and you trade up because you think it's going to go up, you will not make money. Okay, so you got to follow the trend. You got to trade the trend. Do not fight the trend. So what's happening now is it's not trending. It is sideways trading. It's ranging sideways. It's flatlining right here. So we got to wait for the new trend. So what does the new trend look like? Now, every consolidation zone will have a high. So the high is currently right here. This is the resistance for this consolidation zone at 66777, something like that. So I'm going to wait for the high to be overcome by at least 2 candles on the 5 minutes time frame. If that happens, I'm going to take that as a good sign that I can probably try and open a small first trade right here. Now, if I lose money on the first trade, remember, it is the smallest trade for me. I'm not going to lose my bank account with this one trade. Okay, so I advise you to have something like that in your strategy as well. First trade, make it the smallest trade so that it won't kill you. Then if it continues to go in the direction of your first trade it is going to be confirmation. It is going to be validation that you are reading the market right and the market agrees to move in the direction that you have analyzed. In this case, it will move in the direction of the news, which is saying dollar weakness. So if that happens, I win in my first trade, I'm going to open a second trade, maybe even open a third trade. So the second and third trades are going to be slightly bigger than my first trade because that's where I'm hoping to make money. That's where I'm hoping to grow my trading account. Okay. Now, when I say slightly bigger trade, I don't mean 50% of my account. You should be trading, your trading size should be around 2% of your account if you can manage that. Okay. So if you are trading a $100 account, every trade is going to be $2 in size. Okay. If you're trading $50, then every trade will be $1 in size. So something like that. The reason we keep position sizes small is so that if you lose the trade, it is not going to trigger you emotionally. You don't want to be triggered emotionally because after that, you cannot think. And then you'll start to trade on everything and then you lose money and you don't know what happened after that. So avoid that. Keep your trading sizes manageable. I advise 2%. You find out what works for you. You can test it out in your demo account and see what works for you. What is the level that you are happy to trade on a per trade basis, and then use that. So right now I'm just waiting AUD USD to overcome this resistance with at least 2 candles on the 5 minutes time frame, and then probably I'll go and open that first trade, which is going to be the smallest trade. Now the pattern that we are seeing in AUD USD is also the same pattern that is more or less showing up on Euro USD. So the support at Euro USD is even stronger. Look at that. This support right here is made up of 1, 2, 3, 4, 5, maybe 5, 6 candles. Okay. So what it means is a lot of sellers were trying to push it down, but there was also a huge amount of bulls or traders who believe that things are going to go up. So that's different from AUD USD. Look at this. AUD USD. Okay, hang on. Okay, correct. So 5 minutes. You got to check the time frame, make sure it's correct. So look at AUD USD. 2 candles. Okay, the support is 2 candles. And then you get strong push up after that. Different from Euro USD. They can't decide for a longer period of time. They couldn't decide for 5 candles. So that's like 25 minutes. With Aussie, the Aussie dollar, they decided in 10 minutes. So that's a difference. It's not exactly the same. So yeah, now we're just waiting. So what about Euro USD? Euro USD, what about Euro USD? There's a resistance right here, 1087105, something like that. We need to overcome that resistance level because that's going to tell me that this support is useful and there is enough buyers that's keeping that continues to agree with the opinion that things are going to go up. So they buy and push the price up. 2 candles and I'll open my trade. Now you can wait for 3 candles if you want, 4 candles if you want, up to you. Find out what works for you. Find out what you are comfortable with. Your strategy has to be your own thing. Okay, don't look at something that you see on YouTube, on TikTok, or anywhere on the internet and just copy it without understanding. You got to understand what you're doing. So, come on. Looks like it's going to go up. We don't jump the gun, so we wait for absolute confirmation. And we can still get it wrong. I got it wrong a couple of days ago. I opened this trade. I got it wrong. And yeah. Well, don't expect to get it right all the time. This is not, you are in the market. Perfect things don't happen in the market because otherwise everybody will be rich and you'll be the only one left behind. It's not like that. The reality is you're going to win some, you're going to lose some, but you want to be prepared with knowledge, with skills, with experience, with psychology, with patience to be able to make more wins than losses over time. Okay? So that's what we're aiming for. We're not aiming for perfection. We're aiming for high probability trades. Okay? High probability of getting profitable trades. So that's what we're doing. Right now is the boring phase. We're just waiting. Let me know if you have any questions. In the meantime, I do want to tell you that there is a promo going on. That if you use the promo code that's in the description section below, you are going to double your deposit when you make a deposit into your trading account. So don't lose that chance. That code is in the description section below the live stream. Go ahead and grab it and use it. And yeah, this consolidation is taking 1, 2, 3, 4, 5, 6, 7. This is 35 minutes so far of fighting. The buyers and sellers are fighting. They have been fighting for 35 minutes. Some people are already losing money if they jump the gun. We haven't lost anything because we are just waiting. How cool is that? You could protect yourself by just waiting. Said Muntaza, welcome. Best strategy, man. We can't fit that in this live stream. We can talk about it in some other time. But watch our future live streams. Watch our previous live streams. I talk about slightly different approaches in each video. You can probably pick up from there. And come on. So look at this. So AUD USD could make the move up first before Euro USD. Okay, it could move first. Now you can trade based on that if you want, or if you're the cautious and low risk kind of trader, what you can also do is you can wait for Euro USD to also get out of their consolidation zone. Then you know that a big asset is moving up and the weakening dollar sentiment is accepted by the market. And then you open your trade on AUD USD. Okay, so you can use technical analysis here and then get your confirmation, and then you can also wait for confirmation on a different asset, which is a big asset like Euro USD or GBP USD, and then trade after you get confirmation also from this pair to be able to trade the pair that you are watching, which is AUD USD. I hope that makes sense. You're using the correlation to give you confirmation, additional confirmation that could be helpful. I've done that a couple of times, and that's also useful. Yep. So yeah, it's moving in the right direction, but it's moving slowly. You can't rush to make money. You gotta be patient. I think that's the same in business, and trading is also a business. If you think about cost, and if you think about profit, if you think about confidence, you gotta have patience. See, AUD USD is ready to go up. Euro USD not yet. Maybe it's because it's a bigger asset, so there's a lot of people that don't agree with each other, so they take more time to come to an agreement. But once the asset breaks through, then people who don't agree will also tend to follow the people the other side of the opinion, because they don't want to get left behind. So that's why some trends initially difficult to move, and then suddenly it moves really fast because the buyers there's so many buyers, and then the sellers also turn into buyers. So that explains when sometimes you see prices move really fast when they get out of sideways pattern or consolidation zones. Okay, so this is the first candle out of that resistance. If I get a second candle above the resistance, that's my confirmation. Okay, so yeah, so you can continue to watch this asset and trade it if you want. Trade it in your demo account if you're trying this strategy for the first time, and let me know how it goes. I'm probably going to watch this asset as well because it looks ripe for action. But I'll probably trade this after this live stream. Okay, so we've come to the conclusion of today's live stream. I hope you've gotten tons of value from this. Let me know. Let me know, Muhammad Shoaib, you made $12. Wow, congrats. That's the way. So, if you're happy with that, stop trading and come back tomorrow. Don't lose that $12. Hold on to it. Okay. So, if you've gotten value from this video, from this live stream, like and subscribe and tell your friends about the live stream. Use the share button to share it with your friends, trader friends especially. Okay. So, I'm going to see you in the next live stream. Take care and enjoy your trading. Bye-bye.